Hey everybody, welcome to the channel. Soel here, and today I want to teach you 8 price action trading strategies that every trader should know. By the help of these strategies, you can take your trading decisions based on the actual price movements rather than relying on indicators which are derived from the price. Without wasting any more time, let's get started. All right, let's begin with the first one, support and resistance trading strategy. Let me explain very shortly about support and resistance because support and resistance levels are the most important concepts in technical analysis, and they are the base for most of any other concepts like trends, patterns, tools, and many trading strategies. Support and resistance levels are areas where the forces of supply and demand meet. There is a balance and a trade-off between forces of buyers and sellers in these levels. Actually, support and resistance levels are areas where the bulls and the bears have set up their defenses, and these levels act as a barrier and they prevent the price to move further in its direction. In support level, demand is strong enough to stop the declining of the price. It means that in support levels, the price get difficulty to break this level and go lower. In support levels, buyers step in and take the control of the price and push the price up, because when the price gets closer and closer to support levels, it actually means it's becoming cheaper, because historically this level was bottom, so buyers see it a good deal to buy at this level, and on the other hand, sellers see it very cheap and not interested to sell at these cheap prices, and they don't see it a good deal because historically this level was bottom and after that the price advanced. So on one hand, buying interest increases, and on the other hand, selling interest decreases at support level, and this means that demand becomes greater than supply, and this causes the price to go higher. This is how a support level prevents the prices to go lower. And the same interpretation goes for resistance levels, but in the opposite direction. When the price gets closer and closer to resistance levels, it actually means that it's becoming more expensive, and because historically this level was top and after that the price went down, so buyers don't show interest at this high price and they wait in the hope of lower prices. And on the other hand, sellers see this level as good price and selling interest increases, so here supply becomes greater than demand, and this causes the price to go down, and this is how a resistance level prevents the prices to go higher. Correctly identifying and drawing support and resistance levels is very important. I have a guide on this, the link is also in the description of this video, and I recommend you to watch it later if you're not familiar with identifying and drawing support and resistance levels. So when we have an established support or resistance level, we can take advantage of this when the price hits a support level and then bounces up, or hits a resistance level and then falls. This brings the opportunity of opening a long position when the price hits the support level and opening a short position when the price hits the resistance level. The chart setup can be just a support level or just a resistance level, or we may have both and the price trapped in between, like this case, which we call it a trading range, and we say that the price is moving sideways in the range. In this case, you can keep opening long and short positions as long as the support and resistance levels hold, but you must pay attention that you are in a range and the price is moving sideways, and finally a breakout happens in either direction, and you must prepare yourself and have the required measures for your risk management strategy to limit your losses for that case. So if you open a long position when the price starts bouncing after touching the support level, you must place a stop loss below the support level, and if you open a short position when the price starts falling after touching the resistance level, you must place a stop loss above the resistance level. The next price action strategy is support and resistance breakout strategy. I just mentioned that a break out of a support or resistance level can happen, and we can take advantage of this break to enter a trade. Actually, breakout strategy is one of the most popular and commonly used strategy in financial markets. Breaking out of a support or resistance level can happen in different situations. The first situation is when the price is in an uptrend and then it stops at a level and it finds difficulty to pass that level, and a resistance level forms on the chart, like our example here where the price is in an uptrend and at this level it finds difficulty to pass and a resistance level formed. When the price breaks above this resistance level and the candle closes above this level, like what happened here, and the volume also increases simultaneously, which shows that we have increased buying interest among market participants, this is a buying signal and we can open a long position. The stop loss for this trade can be placed below the broken resistance level, which is now acting as a support level. In our example here, here on this chart, we can place it below the breaking candle low. This trade has a high probability of getting the expected result because the prior trend was uptrend, and then after a period of consolidation in the middle of the uptrend, we are entering in the direction of the trend exactly when the price is getting out of the consolidation and continuing its direction. The same situation happens in downtrends when the price finds difficulty to pass a level and a support level forms on the chart, like our example here where the price is in a downtrend and at this level it finds difficulty to pass and a support level formed on the chart. When the price breaks below this support level and a red candle closes below this level with increased trading volume in this period, this is a sell signal, or it's a signal for opening a short position. The stop loss for this trade can be placed above this broken support level, which is now acting as a resistance level. Placing above the breaking candle high would be a good level for the stop loss in this example. In this trade, we have high probability of getting the expected result because the prior trend was downtrend, and after a period of consolidation, we are entering in the direction of the downtrend because the price is getting out of the consolidation and continuing its direction. Another situation of support and resistance breakout is when the price is in a trading range. So when the price breaks below the support level, it's a sell signal, or it's a signal for opening a short position. The stop loss for this trade can be placed above this broken support level, which is now acting as a resistance level and will prevent the price from going higher than this level. And similarly, when the price breaks above the resistance level, it's a buy signal, or it's a signal for opening a long position, and the stop loss for this trade can be placed below this broken resistance level, which is now acting as a support level and will prevent the price from going lower than this level. The next strategy is support and resistance false breakout strategy. Not all breaks are valid, and the breakout may turn to be a false breakout. Many of the times when we have a false breakout, the prior break is usually not valid. For example, we may not see a significant increase in the volume, like this case here, or the closing candle may not be significant, but it can also happen when the break is considered valid, which is usually because of bull trap or bear trap run by big players. Anyway, the false breakout itself can bring an opportunity of entering a trade. For example, after this breakout, which can be considered not valid because the volume didn't increase significantly, we can see that the price stopped and then a large red candle engulfing the body of the previous two candles, actually closing below the opening price of the breaking candle, closing below the broken level. And this is happening with considerable increase in the volume, which confirms that the breakout was a false breakout and the price can move down to the support level of the range. So here at this point, we could enter a short position with the stop loss placed above the resistance line or above the high of this candle if we intend to give more room to the price movement. The next price action strategy is support and resistance retest strategy. Many of the times when the price breaks a support or resistance level before continuing its breakout direction, it retests the broken level. Actually, we have a pullback and then the price continues in the direction of the breakout, like our example here where the price breaks this support level, but after that we have a pullback and retest of the broken level, and after that the price turns back in the direction of the breakout and continues declining. Aggressive traders who take more risk in exchange of more rewards, they enter when the breakout happens, but conservative traders who take less risk choose not to enter on the breakout because they are afraid that it may be a false breakout. So they wait for retest of the broken level and then they enter a trade when the price turns back in the direction of the breakout. A very conservative trader may wait until this low is broken. Alright, the next price action strategy is trendline trading strategy. Entering in the direction of trends is the safest strategy for trading in financial markets, and it provides you a high probability trade with minimum amount of risk. Trend lines are also another types of support and resistance levels. An uptrend line acts as a support level and a downtrend line acts as a resistance level. The difference is that these lines are sloped upward or downward, and they show the direction of the market in that way. So in the same way that we had trading opportunities with horizontal support and resistance levels, here also we can enter a trade when the trend line is touched. But in this case, the market is not in a range and we are entering in the current direction of the market, which has more probability of getting the expected result. Correctly identifying and drawing trend lines is very important in trading. I have a complete guide on this, the link also in the description of this video, and I recommend you to watch it later if you don't know how to identify trends and draw trend lines. Alright, getting back back to trendline trading strategy, there are 3 different tactics for trendline trading. The first one is called enter and let run. This strategy is suitable for conservative traders who don't like to take too much risk or to take risk regularly. All they want is to have a trade with minimum amount of risk and not to expose themselves to risk often. So enter and let run is a perfect strategy for them. As the name clearly indicates, after identifying a trend, when the price reaches to the trend line and then starts advancing, a trade in the direction of the trend is placed and then letting it run until the end of the trend, selling it when the trend ends or change its direction. In this method, whether it's entering a trade or exiting the trade, it's very important to know how to discover if the movement against the trend is just a pullback or ending of the current trend and possibly a reversal. I have a complete guide on this, pullback versus reversal. The link is also in the description of this video, and I highly recommend you to watch it later because it's really important to know how to discover end of the pullbacks or starting of reversals. The next tactic is called in and out. This method is suitable for moderate risk traders who like to take a little bit more risk to make more profit. In this strategy, after identifying a trend and when the trend is confirmed, the trader enters a trade when the pullback ends and exit the trade when the move stops and go for another pullback, and the trader repeats this on each pullback. In this strategy, you must also work on lower time frames for spotting precise entry and exit points. As I said, this strategy has more risk in compared to enter and let run strategy because you're exposing yourself to risk regularly and your collected profits can be easily wiped out if the market goes against you. So setting stop loss and managing your risk properly is the key to your success in this method of trading. And the last one is called adding up strategy. In this method, the trader takes the full advantage of a trend and tries to make profits with every movement of the trend. In this method, when a trend is identified and confirmed, we enter a trade in the direction of the trend, and then on each pullback we add to our position. This method is very profitable but at the same level very risky. The adding up strategy is more suitable for aggressive traders who like to catch every movement and expose themselves to more risk in exchange of more profit. In trendline trading strategy, it's very important to know if the counter trend movement is a pullback or starting of a reversal, so make sure to watch my video on this subject. The next price action strategy is a trendline breakout strategy, which is actually a sign that the trend may end or a reversal may happen. For example, here on this chart, the price is in an uptrend, and as you know, the uptrend line acts as a support level. And when the price breaks this level, like what happened here, it's a sign that the current trend is probably ending and a reversal is possibly happening. And we have the same situation in downtrends, like our example here, where the price is in a downtrend and the downtrend line is acting as a resistance level, and then the price breaks this level and it gives us the signal that this downtrend is probably ending and a reversal is possibly happening. Please pay attention that entering a trade against the direction of the market has more risk, and we need more confirmation for any possible reversal because after the breaking of the trend line, the reversal doesn't necessarily start instantly and the price may go to a trading range and consolidate for a while and then continue its prior direction, or it may reverse and a new trend may start after a period of moving sideways. So you can count on this breakout as an initial signal of reversal that needs more analysis for any trading decision against the direction of the market. The next strategy is trendline false breakout strategy. As I've already explained, not every breakout is a valid breakout, and sometimes they turn to be a false breakout, especially with a trendline breakout, which is actually a movement against the current direction of the market. Anyway, the false breakout itself brings us the opportunity of entering a trade in the direction of the prior trend. For example, on this chart, you can see that we had a trendline break at this point, but shortly after that, we got a long red candle engulfing the previous 3 candles and closed back above the trend line with considerable increase in the volume, as you can see, and this confirms that this trend line breakout was a false breakout, so providing us a trading signal in the current direction of the market. And the last price action strategy I want to explain is trendline retest strategy. Sometimes when the trend line is broken, like our example here, the price may turn back and retest the broken level before continuing in the direction of the breakout, which provides a safer signal for entering in a trade. But please pay attention, as I explained earlier, entering a trade against the direction of the market has more risk, and we need more confirmation for any possible reversal and any trading decision against the direction of the market. In this video, I explain 8 price action trading strategies which are purely based on the actual price movements of the market rather than relying on indicators which are lagging and derived from the price. Analyzing the price action gives the opportunity of identifying changes in the early stages of developing, so providing a better trade entries and risk to reward ratios. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.